Hi everybody, this is Lara with your weekly video for oil for the week ending Friday 29th of July. I'm still expecting overall upward movement for oil unless we see a new low below 85.41. That would invalidate the bullish wave count and add confidence to an alternate. But at this stage, both of them are going to expect at least some more upward movement. The final target remains the same at 132. Elliott Wave analysis first, classic analysis last. The main Elliott wave count remains the same. It still expects that cycle wave 1 is incomplete. Both wave counts see a huge double zigzag complete for supercycle 2 down here. Both wave counts see 2 over here and 3 beginning here, which may only subdivide as an impulse. That will be labelled at cycle degree 1, 2, 3, 4, 5. Elliott wave is fractal. Within the impulse of supercycle 3, cycle wave 1 is also subdividing as an impulse, and that'll be labelled at primary degree 1, 2, 3, 4, 5, and primary 5 is extending. When cycle wave 1 is over, cycle wave 2 will be expected to last 1 to several years and may find support at the upper edge of this channel on the monthly chart. So this channel is going to continue to be important. Draw it from this high up here to this high here, place a parallel copy on this low. Cycle wave 2 may not move beyond the start of 1 below 10.24. This trend line showed where price found resistance as it approached the trend line, pulled back, broke through, support just a little below the trend line, a bounce away, found support almost perfectly at this trend line. So this trend line has been tested multiple times and is showing where price is finding resistance and support. So I expect it may show where cycle 2 may find final support. I have 2 wave counts at the weekly chart level. They both see cycle wave 1 beginning down here. Let's look at the first. This low here is this point here. This wave counts labels within cycle 1, primary 1, 2, 3 and 4 over here, and primary wave 5 extending with intermediate 1, 2, 3, 4 and intermediate 5 to continue higher. Draw a best fit channel on the weekly chart on a semi-log scale around this upward movement. Draw the first trend line from this low to this low, place a parallel copy up on this high. It shows an overshoot here, but apart from that, this channel contains all of this bullish movement. Intermediate 4 may have found support at the lower edge of the channel, and again this week, downward movement may be finding support about the lower edge of that channel. Intermediate 4 may not move into wave 1 price territory below 85.41. A new low below this invalidation point would invalidate this bullish wave count and add confidence to the alternate. Let's take a look at how intermediate 4 may have subdivided from this high here, the end of 3. This point here, intermediate 4 may have subdivided as a zigzag labelled minor A, B, C. Minor A, a brief 5-wave structure. B, a double zigzag, moved price higher and did not move beyond the start of A, and C, an ending contracting diagonal. When 4 ends, 5 begins. Intermediate 5 may only subdivide as a 5-wave motive structure, and within it minor wave 1 may be complete and minor 2 may move a little bit lower next week to find support closer to the lower edge of that best fit channel, which I drew on the weekly chart and I've copied over here to the daily chart, and they're both on a semi-log scale so that the channel fits in the same way. Minor wave 2 may not move beyond the start of 1 below 90.56. The target remains the same for primary 5 to reach 1.618, the length of primary 3 at 132. At the weekly chart level, this alternate is slightly changed. It's still seeing cycle wave 1 over at the high, and now it's going to move the degree of labelling within cycle 2 down 1 degree to see only primary A or W over at this last low. This wave count still has a lower probability because it has a problem in terms of proportion. The first wave count sees cycle wave 1 incomplete, but if cycle wave 1 was complete over at this last high, then we have to label it as a 5-wave motive structure. It won't fit as a diagonal, so the only other option is an impulse. And when I try and label this as a complete impulse with 1, 2, 3, 4, 5 all complete, the problem is within primary 3. Intermediate 1, 2, 3, 4, 5 sees intermediate 4 much longer lasting than intermediate 2. There's a problem of gross disproportion between 4 and 2, giving this wave count the wrong look, especially as it is 4 which is longer lasting than 2. And when commodities have disproportionate second and fourth waves, it's usually the second wave which is longer lasting, and highly unusual for the fourth wave to be much longer lasting than the second. So the probability of this wave count at the weekly chart level is a lot lower than the main wave count. Let's turn our attention now to the structure of cycle wave 2. It could be continuing further either as a flat or a double combination, with primary A or W complete down here as a zigzag, and now B or X to bounce higher, and then C or Y to move lower. Let's take a look at this at the daily chart. This high here, the reason why I've moved the degree of labelling this week is it has a much better proportion. Trying to see cycle 2 over here like I did in previous weeks, it just doesn't have the right look. It should last a lot longer than that for a cycle degree correction. Okay, let's take a look at this high here on the daily chart, this point here. If primary wave A or W is over here, it's subdivided as a zigzag. So all the subdivisions are the same for both wave counts, it's just at the daily chart level. It's just the degree of labelling which is different. Intermediate A, B, C, you could see a complete zigzag over here for primary A or W. When A subdivides as a 3-wave structure, then a flat correction or a combination is indicated for the correction. Within a flat, A must subdivide as a 3, B must also subdivide as a 3, and must reach a minimum 90% the length of A. That would be achieved at 125.55. The common range for B within a flat correction is from 1 to 1.38 times the length of A. So for this example, from 129.44 to 144.21. B may make a new high beyond the start of A as in an expanded flat. When B is complete, then C should move beyond the end of A to avoid a truncation and a very rare running flat. That's if cycle 2 is a flat correction, but this chart also encompasses another idea. What if cycle 2 is a combination? Then we may see a zigzag over down here to be labelled primary wave W. The zigzag may be the first structure in a double combination, or possibly even a double zigzag for cycle 2. The double may then be joined by a 3 in the opposite direction to be labelled primary wave X, which has no minimum requirement and no maximum requirement length related to primary wave W. So these figures these figures apply to a flat correction only and not a combination. So it means that this price point does not have to be met for this wave count, only for a flat correction for cycle 2. If cycle 2 is a combination, then X would be expected to be relatively deep in relation to W. If cycle 2 is a double zigzag, then X may be relatively brief and shallow. If cycle 2 is a double combination, then after B is complete, then C would be expected to end about the same level as A so that the whole structure takes up time and moves price sideways. If cycle 2 is a double zigzag, then C would be expected to deepen the correction. I think a double zigzag at this point though has actually got a pretty low probability, because this B wave in relation to this A wave is so very, very deep, and C really hasn't moved much below the end of A. So far, this movement has a real sideways look to it, and that's what combinations look like. Double zigzags, like single zigzags, should have a strong counter trend slope. Here's an example. Minor W in relation to the previous movement has a quite a sharp slope. I hope that makes sense. Combinations can be a little bit complicated. It took me a little while to wrap my head around them. I remember when I was learning Elliott Wave all those years ago. Okay, at the weekly chart level, classic analysis. This week completes a bullish candlestick, but it's not, the close of this week's candlestick is not far enough within the real body of the prior candlestick 2 weeks ago for these three to be a morning star. So this is a bullish candlestick, but it has a little bit of a bearish upper wick, and it doesn't have enough support from volume compared to previous downward weeks to be read as particularly bullish, but it is bullish for the short term. Price is consolidating with the resistance about 123 and support about 93. On balance, volume is also consolidating and ADX indicates no clear trend. So within this consolidation, we're seeing swings from resistance to support, and it looks like we may now be seeing the start of an upward swing to resistance, and this essentially expects upward movement, which is what both of the Elliott Wave counts now this week also are in agreement on. RSI is neutral, stochastics entering oversold as price has reached support. It looks like we've got the end of a downward swing and looking at a new upward swing. For the short term, within that larger consolidation, this downward swing at the daily chart level indicates a trend within a larger consolidation. So at this lower time frame, the downward swing reached an extreme trend according to ADX. ADX is now declining, indicating that this downward swing or downward trend at the daily chart level may now be over. For the very short term, the volume profile is slightly bullish, a little bit of push from volume in this last completed upward session, but a bearish upper wick, and this is why for the very short term my main daily chart expects a little bit of a downward swing to again test support before the upward swing begins with strength. If this is a consolidation, then the upward swing would be expected to be choppy and overlapping. That's how price generally moves within consolidations. So we've been over the candlesticks, there's a hammer candlestick also at the prior low just several sessions ago, which also supports the idea of the end of this downward swing and the start of an upward swing. On balance, volume is also constrained. We've been over ADX, RSI neutral and stochastics neutral, and ATR declining as price moves higher, which is normal behaviour for this particular market. That's all from me with your oil analysis this week. I hope all our members had an awesome week.